Good morning and thank you for joining in today. My name is Shoaib. I am from Access Mutual Fund. And today we have Mr. Hari Haran, who has more than 15 years of experience. He's head of learning and development at Access AMC. He is also an author of book on personal finance, and he has conducted training for more than 5,000 people and many families and distributors across India. Today's topic is actually around hybrid funds. So, if you look at it, many investors have started investing in the last few years. And in 2022, once again, we are seeing that equities are volatile. And a lot of people have been coming back to us saying that the portfolios are not doing so well. So, how is it that they should? What is it that they should consider? And how should they look at equity? Now, one of the things that happen with equity is, in general, it is always volatile, and many people they don't consider debt because they look at it that debt don't generate a lot of returns, and henceforth they may ignore it, which is where today's topic hybrid is actually a very good option about which Hari will be explaining to all of you, and which investors can actually consider because it's a mixture of both equity and debt. So now with this brief introduction, I would like to hand over to Hari for today's presentation. Hi Hari.
Hey.
It's all
Thanks,
yours.
Shoaib. Good morning, all. Thank you so much for joining in for today's webinar. As Shoaib said, we are living in very interesting times. Markets have become extremely volatile. We have seen the markets correct significantly by about 16-17% from the peak level that it went in October 2021. But at the same time, we are also witnessing something very interesting on the debt side of it. We are seeing that the interest rates are going up. RBI is becoming aggressive in terms of the rate hikes, and that is expected. So what we'll do today is, as Shoaib mentioned, there's a lot of queries as well as worries around the investment. And therefore, given that the volatile markets are here to stay for some time, how is it that as investors we can look at minimizing the volatility and at the same time look at having a better experience in the market? And that is what we'll try and look at in today's topic, which is based on hybrid funds. My only sincere request to all of you, please participate. I will not ask too many questions, but whatever questions I ask, please try and respond back. There's a question box which is available, so you can respond back in the question box itself, and Shoaib will try and figure out your answers and try and get back to me on that. तो आप लोगों से रिक्वेस्ट है, गुजारिश है कि आप लोग पार्टिसिपेट करिएगा. सवाल पूछूंगा तो जवाब देते जाइएगा. So let's start today's topic. Let me begin by taking you through something which has happened in the markets. So if you look at what has happened in the markets over the last, 1 year period, and this is across both developed markets and the emerging markets, clearly you will find that the markets have undergone corrections across, barring a few countries. I think most of the countries have found that the stock markets have given negative returns, especially if you look at the short-term performance. And for some of the countries, you will find that even the 1 year performance is pretty negative. But what you look at from an Indian perspective is that even though there have been challenges globally in terms of the headwinds and that have impacted the global markets, India still sort of stands out on a 1 year performance, right? So that's one of the good things that is happening. We'll dig deep into this as we go along in some of our subsequent slides. अगर हम इंडियन मार्केट्स की परफॉर्मेंस देखें, this is the split across different indices. Again, from a short-term perspective, you will find that the markets have given negative performance, especially the 6-month period you will see, and that is where the challenge and the question and the worry is there for the investors. From a 1 year perspective, the returns are pretty low, and that has to do a lot with what has happened in the markets over the last few months. But what is interesting and important for all of us to note is that the 3-year, 5-year, 10-year performance is pretty much intact, and these are reasonably good numbers from a 3-5 year perspective. So the medium term, long term performance is pretty good. It is only the short term that that there are challenges that we are facing, and we'll understand what is the reason behind all these underperformances. And therefore, as investors, what is it that we should try and do from a portfolio perspective? Obviously, as we were saying, we have seen that the markets have corrected. And today, honestly, we are facing a tough situation. Now, when I say tough situation, it is not just from an Indian perspective, even from a global perspective. So I'm going to talk about US. Why? Because it's one of the largest economy in the world. And of course, from a domestic perspective, what is happening in India. So obviously, I'm sure all of us would have read the news. We get the headlines that we have seen that in US, for the first time in 40 years, their inflation has gone very, very high. महंगाई का दर बहुत ही ज़्यादा बढ़ चुका है US में. We have also heard of news that the GDP numbers, which is the growth in the economy of US, has declined by 1.4%. And there are talks of recession that is expected in the US. If you look at the Indian perspective, you will find that the consumer price index, which is a measure of the inflation, जो महंगाई का दर है उसको measure करने का एक तरीका है, is well above the RBI comfort zone. RBI has a target to manage CPI between 2 to 6%, but consistently we have seen that the CPI numbers are coming above 6%. And that's a concern, and that's a worry for the RBI. On the other hand, we have also found that the wholesale price index, which is the WPI, is also for the 14 months consecutively, we have found that it is in double digits. तो दोनों जो महंगाई का दर है, CPI and WPI, both of them are consistently above what has been happening historically in India. Now, those are worrying signs. And one of the primary reasons for that is that the crude oil is above $100 per barrel. So, जो तेल है उसका भाव काफी बढ़ चुका है. And because we are importers and we are one of the largest importers of crude oil, there's a significant impact. And that has also resulted in the import bill going out in terms of the foreign currencies going out of the country, resulting in rupee depreciation as well. So net, if you look at it globally as well and in India, there are tough times that we have seen over the last few months, and perhaps these tough times might continue for some more time. तो मेरा एक सवाल है आप सभी लोगों से, ये tough situation हुआ क्यों? Why do you think? What is the reason for this tough situation that we are witnessing currently? If you can use that question box to put in your responses, it would be great. I will just wait for a few seconds and wait for Shoaib to sort of check and respond back if there are any responses. तो जो tough situations हमने देखे हैं, बाजार में गिरावट देखी है, what are the reasons? Primarily, what is the reason that you feel is sort of the main reason for this particular situation that we are in?
So we have started getting responses, Hari. One of the responses, COVID aftermath.
Okay.
And the other response is geopolitical reasons.
Okay, geopolitical reasons. Okay, great. Absolutely. So thank you so much for people who have responded. Absolutely, the geopolitical situation is one of the reasons why we are seeing all these that is happening. So I will take a minute to quickly talk about what is the impact of the current geopolitical crisis that is happening. And that's been happening for quite some time now. And clearly, you will find because of this crisis, there is impact across the entire spectrum of commodities. There is impact on energy. As I already said, oil has gone about $100 per barrel. तो कहीं ना कहीं तेल, commodities, metals, सब पे impact आया है. Supply chains have got disrupted, and because supply chains have got disrupted, I'm sure all of us would have heard of so many news about what is happening across different commodities, including food articles, and clearly all that has resulted in inflation. So ये जो महंगाई है, ये across the globe हो चुका है अभी, not just in India and US. So this is an impact of the current geopolitical crisis, and inflation is one of the sort of impact that is left behind by this crisis. And inflation, to a large extent, can be damaging, at least in the short term, right? So let us understand what is it that has happened. So this crisis has started a few months back. It is ongoing. And therefore, if we want to sort of come out of this situation, I'm sure all of you would agree that somewhere every one of us and the world wants peace. Okay, only when there is peace, we come out of this crisis. Most of these things which we have seen in terms of the commodity price hike, energy prices going up, etc., will sort of cool down, and things can become normal once again. So peace is very important. Now, what we have understood so far is what has happened in the markets and what is the reason behind this. Obviously, it is the geopolitical crisis or the conflict that is happening, and we want peace. Now, let us understand from an investment perspective, is there some conflict when it comes to investment? Let us understand that. Okay, does conflict occur when you and I invest? That's important. We will definitely come back to hybrid, but more importantly, I would want to spend some time on why hybrid is essential for all of us. And that is why I would seek your responses here again. Okay, I'm going to ask you a couple of questions. I want you to respond to these questions as quickly as possible. जितना जल्दी आप हो सके, मैं 2 सवाल आपको पूछने वाला हूं. दोनों सवाल के जवाब आप तुरंत respond करिएगा. Right? So the first question is coming up on the screen. Look at this image and tell me what is it that you're able to see. क्या दिखाई दे रहा है आपको यहाँ? Shoaib, please help coordinate this.
Yes. Some people are saying that it's an angry person, and
Okay.
some people are saying that it's an angry lady.
Okay. Great.
Some people also view it as someone who is extremely emotionally stressed.
Okay, emotionally stressed. Okay.
Some people even find it as fearful. That
Oh,
the
interesting.
person is. That's very interesting.
Great.
Anger, sadness,
Okay, good.
tensed.
Tensed. All right. Which is very much what most investors are today. Yes, absolutely. Very nice. Thank you so much once again, Shukriya. All those people who have participated. I'm going to ask the next question quickly again. I want to get your responses for this question as well. अगला सवाल आपके सामने आ रहा है, इसका भी आप जवाब तुरंत दीजिएगा. What is 18 multiplied by 26? इसका आपको आंसर देना है. और मैं उम्मीद करता हूं कि nobody cheats, कोई भी मोबाइल का कैलकुलेटर इस्तेमाल नहीं करेगा. What is 18 multiplied by 26?
Oh, the first answer is approximately 450.
Okay, 450. All right.
And 448.
Okay. थोड़ा नजदीक आ रहे हैं हम. Sorry.
430.
430. All right.
416.
Okay.
468.
468. Okay, very good. All right. I'm sure none of you have used the mobile phone or the calculator to get the answer, but nonetheless, all those people who have responded, let's understand why this is important from an investment perspective. When you look at the first image, which is that of the lady, I don't think we took time to respond. But when you look at the second question, which is a multiplication question, most of us would require some time to respond back, isn't it? ये दोनों सवाल बहुत सिंपल है, लेकिन दूसरा सवाल थोड़ा कठिन है बिकॉज आपको थोड़ा सोचना पड़ता है, मल्टीप्लिकेशन करके देखना पड़ेगा, तब आपको जवाब मिलेगा. अब इसका इन्वेस्टमेंट के साथ क्या ताल्लुकात है? Let us understand what is the relation with investing. Very important topic. Now, there's a very famous study which is done which says that there are two systems that operate inside our mind. One of the system is called system 1, the other is system 2. And this is based on a very important concept by a gentleman by the name of Daniel Kahneman, who also won the Nobel Prize for this particular ideology or thought process. So it is called thinking fast and slow. Now what happens is that our mind has got two systems, and there are these systems which operate, which are very, very contrasting in nature, very different from each other. System 1 is a thinking which is very fast, which is instinctive. You look at a situation, you quickly respond. हम सोचते नहीं है, जवाब दे देते हैं. It's always automatic, it's always live, and it can do those things which requires very little effort. So वो system 1 का thinking है, which is very fast, but the problem with system 1 is that it is emotional in nature. That's an important point to remember. System 2, on the other hand, is a slow thinking system. Situation आता है, लोग देखते हैं, समझते हैं, then they respond. So they evaluate the situation, then they respond. And therefore, system 2 is capable of handling majority of the complex situations. It is more logical, it is more rational. But system 2 requires an effort. So the lady photograph, there was no effort required for you to respond. So you're very quick to respond and say that, hey, this is an angry looking lady. This is perhaps a lady who is confused, etc., etc. But when you look at a question which is multiplication, naturally, for human beings, it takes time to calculate. So system 1 is not capable of handling it. So it goes to system 2. But system 2 is always dormant. Usko thoda samay lagta hai. So you, based on the situation that you and I face in our life, we use system 1 or system 2. Ideally speaking, we should be using both the systems based on the situation, right? But we will see something interesting that happens. Okay. Now, system 1, please remember, is emotional. System 2 is logical. Most of the time, we believe as human beings that we take logical, rational decisions. But the fact is very different. Most of us, most of the time, take emotional decisions. Right? Now, why this happens, let us understand. So I talked about system 1 and system 2. Please remember, these are structures inside the brain or the mind. When I say structures, they are not physical structures. These are just hypothetical structures. But what happens here is that both system 1 and system 2 is residing in the same brain. You can relate this to our own families. And again, I'm just going to take a very simple example. Pardon me for the example. Bura mat manna is example. But I hope this example explains what I'm trying to tell you now. So आपने घर पे देखा होगा, you would have seen in the family, there's a mother-in-law, there's a daughter-in-law. Again, don't take me wrong for the example, just to illustrate the point. All of us know that the mother-in-law and the daughter-in-law is staying in the same house. And there is this cold war that happens between both of them. Right? Now, the guy who is the gentleman has to listen to his mother as well. He has to listen to his wife as well. Now, same happens inside our mind. System 1 and 2 are operating inside our brain. And both of them are telling us, hey, listen to me. Meri baat maan. So system 1 bolta hai, main to hamesha taiyar hu, I'm always active, please use me. System 2 says, I am logical. Think, allow me to respond. And in this conflict, what happens is that we as individuals, as human beings, tend to sometime use system 1, sometime use system 2. Ideally, this usage of system 1 and 2 should be based on our situation. But because there's a conflict that is happening inside our mind, we tend to use somebody very frequently. And the unfortunate part is, most of us tend to use system 1 most of the time. ज़्यादा करके हम system 1 का इस्तेमाल कर देते हैं. There are two reasons for it. One, I have already said that system 1 is always active. It is always ready to give you that response. And 2, as human beings, we always like to take shortcuts. And therefore, the human nature is that I don't want to take an effort of going to system 2 and take the response. I would rather take system 1, which is already available for me. It is ready for me. तो उसी का हम इस्तेमाल कर लेते हैं. But the problem I already told you is system 1 is emotional in nature. Now, because of this conflict between system 1 and system 2, as individuals, we tend to take emotional decisions. I already said, we feel we take logical decisions, but most of the time we end up taking emotional decisions. And therefore, let us understand how emotions play an important role in the investment cycle. Now, this is the investment decision cycle. Again, everybody knows about this. हम सब जानते हैं that whenever the markets have corrected, we should invest. Whenever the markets are low, we should invest. But what happens? So look at the cycle here. When the markets are bad, the thought process is thoda intezar karte hain. Let's wait. Because we are feeling that this market correction is going to continue, perhaps the market will fall further. So let's wait and invest. And then as the market starts going up, we suddenly find that, oh, markets are going up. And then since the market has gone up, we did not invest earlier. अब हम वापस invest करना नहीं चाहते, हम बोलते हैं चलो रुक लेते हैं. Let's wait. But market does not stop, it continues to go up. And the moment we see that it has continuously gone up, now we feel, I have already missed out. Fear of missing out, FOMO. So I say, let go and invest. So I'm now investing when the market is almost at a high level. And then the market cycle happens, there's a correction. And when the market corrects, people who have invested become fearful. So earlier it was FOMO, now they become fearful. Some of them will exit. Right? People who have been fence sitting, जो इंतजार कर रहे थे अभी तक उन्होंने एक साइकिल देखा, उस साइकिल में उन्होंने पार्टिसिपेट ही नहीं किया, जैसी बाजार नीचे आया, अब देखें कि नीचे आया, they say now let's wait, और थोड़ा इंतजार कर, इतने साल तो वेट कर ही लिए हैं, और थोड़ा वेट कर देते हैं. Then again the markets are going up, again there's a different thought. So what I'm trying to communicate here is that these emotions play a very important dominant role in investing. And because of emotions, because of system one which we understood, please remember emotional decisions are not always correct. Emotional decisions can be wrong. And you can imagine a wrong emotional decision, what is the impact of that wrong emotional decision in investing? So emotions will cause investment mistakes. ये हो ही जाता है. Because there's always fear, greed that will play inside our minds. Right now we are witnessing, we have seen markets have corrected, there's extreme volatility. And therefore the concern is a lot of people who are still waiting to invest. They are waiting for the markets to still correct. People who have already invested have seen correction in the portfolio. वहां पे भी दुविधा है, क्या करें, what has to be done? So emotions will always be there. And therefore, how do you cut out the emotions is what we'll try and understand. So human beings are extremely emotional. We all know that, right? Now the question is, when it comes to investing, and we know that equity markets can be extremely volatile, what you see on the screen is the financial year-wise performance of Sensex, right from financial year 1999 and 2000 up to financial year 2021-22. And we all know this as investors, that you have these large, huge skyscrapers. बड़े-बड़े numbers दिख रहे हैं आपको, when the markets have performed extremely well. But there are also instances where markets have corrected. So out of these so many years, you will find that there are 7 years when the markets have corrected. Negative returns, negative performance, downfall, challenges. As investors, as human beings, as emotional decision makers, how many of us can handle this? And this is the challenge. हम सब जानते हैं कि बाजार में उतार चढ़ाव होता है, but how many of us can handle this volatility in the market? Very difficult. And therefore, when you look at some very astonishing numbers, data suggests that people who invest in mutual funds, 67%, which is almost 2/3, they exit before 3 years. Only 25% of them complete 5 years. Only 2% complete 10 years. Now you see how emotions play. जब हम बाजार में आते हैं, everybody comes with a long-term view. But the moment you enter the market, there's so many things that is happening. There's so many events that are happening, so many emotions that play in your mind. And then suddenly we take those emotional decisions. And those 2% people are the people who end up creating them. So what I've explained so far, why I'm explaining all this is, before we get to hybrid, let us understand why that hybrid is required in the first place for all of us. So this is purely because of emotions. And those emotions can play havoc when it comes to investing, when it comes to wealth creation. And therefore, it is important to understand one more interesting fact. We talked about the global crisis, the geopolitical crisis, and we said peace is the solution. Don't we as human beings, as investors, also want peace? And the peace that we are talking of is the mental peace. So let's understand, very interesting. What I'm telling you here is that there's no linear equation here. So when you see a market downfall, so let's assume market has corrected by 10%. So 100 रुपए की value 90 हो गई. For that 90 to become 100 again, if the market goes up by 10%, that 90 will become 99. It will still not become 100. Which means for the market to go back to 100, the market has to deliver positive 11% returns. Similarly, let's take a next example of 50% or the 30% correction. 100 has become 70. 30% fall. But उस 70 को 100 में वापस जाने के लिए, if you grow only by 30% again, you will reach 91. But for you to reach 100, your performance has to go up by 43%. It's a very important slide here. Whatever is the fall, if the market recovers by the same amount, you will not come back to your original position. Your markets have to deliver faster and more than what you have fallen. And therefore, when it comes to investing, the lesser you fall, the easier it is for you to come back to your original position. And when you fall less, you have less emotions. You're not very worried. Of course, you would be worried, but you're not extremely worried. Versus a 30% fall, if you have a 10% fall, you're better off. And therefore, you feel at peace. Isn't it? That's very important. Why are we discussing this? Because let us now see how do we achieve that peace in investing. So that we are not worried constantly कि मैंने investment कर दिया क्या हो जाएगा. Right? So let's understand how we do that. So how do I mitigate that risk? Let us understand them through hybrid funds. Now, what are hybrid funds? Quickly, let us understand. These are the funds that invest in multiple asset classes, typically 2 or more asset classes. What could be these 2 or more asset classes? One could be I invest in equity and debt. So there are 2 asset classes. So that becomes a hybrid fund. I could have equity, debt, and gold, 3 different asset classes. That's a hybrid fund. तो ऐसे funds जो 2 अलग investments या asset classes में निवेश करते हैं, उनको हम hybrid fund बोलते हैं. Now, how are they classified? They're classified on the basis of the taxation. So the taxation is dependent on which of the asset class has a higher composition. So अगर 100 रुपए में से equity has higher composition, the taxation is equity taxation. On the other hand, if out of 100 rupees debt has a higher tax composition, then it will have a debt taxation. So depending on what is there inside the portfolio in terms of the asset class, that determines the taxation. The other way by which we can classify hybrid fund is on the basis of how frequently the asset class in that portfolio is changed. Does it remain constant? Does it change? So there are certain hybrid funds where the ratio between equity and debt can keep on changing. बदलते रहेगा equity or debt का composition. Such hybrid funds are called dynamic hybrid funds. Or more commonly, they are referred to as dynamic asset allocation funds. But there could be hybrid funds which will invest 65% in equities, 35% in debt, constant. तो है दोनों, लेकिन दोनों का percentage fixed है. So those are called static hybrid funds. And we'll understand some of these and how relevant it is for all of us from a portfolio perspective. Very important for us to understand why hybrid. So one aspect of why hybrid I have explained using emotions, why it is important for all of us as human beings to look at hybrid. Now we will look at from a portfolio perspective, why it is important to look at hybrid funds. So first and foremost, hybrid funds are less volatile as compared to pure equity funds. The fluctuation is lower. Two very important, different asset classes perform at different periods of time. तो कभी इक्विटी अच्छा करेगा, कभी डेट अच्छा करेगा, कभी गोल्ड अच्छा करेगा. And we'll come to that in some of the subsequent slides. And therefore it's important to look at hybrid because hybrid had everything in one place. Third interesting thing is hybrid as a category has different types of hybrid schemes. And therefore it can address a vast majority of investor types. So conservative investors can also invest in hybrid funds. Aggressive investors can also invest in hybrid funds. Moderate clients can also invest in hybrid funds. So हर एक class of investor के लिए एक hybrid fund available. And most importantly, despite the fact कि hybrid में equity debt दोनों है, you help or you get very tax efficient returns. Okay, and we'll understand some of these as we go in our subsequent slides. Now we will understand each of these in slight more details. Let me ask a very simple question to all of you. Again, you can respond back in your question box. There are two charts that I'm showing you, chart 1 and chart 2. What do you think is more likely to happen? Chart 1 or chart 2? What is more probable? दो चार्ट में से आपको क्या लगता है कि कौन सा चार्ट ज्यादा पॉसिबिलिटी से होने के बाजार में? Put it in the question box. Which chart do you feel is more likely to continue or happen?
So, Hari, the responses started coming in, and the first response is the best one. It says we would want it as chart 1, but it seems more like chart 2.
Okay, great, very nice.
So everybody saying chart 2.
Great, very good. So everybody agrees that it is chart 2, and all of you are very right. Chart 2 is more probable. Very unlikely, or you could find very few times or instances when the market is unidirectional. तो कोविड के बाद हमने देखा जैसे बाजार की रिकवरी हो गई, it was almost one way, and now we are seeing that it is coming down. There's volatility, but by and large, at least in the short term, you will find chart 2 is more probable. Markets will go up, that's for sure, but the journey will not be this way. The journey will be like this. It will go up, but you will have intermittent corrections, gains, falls, so on, which means the markets will continue to be volatile, especially in the short term. Now, what could be the reasons for the volatility? There could be a variety of reasons, and some of these reasons are playing out today. I'm just giving a very generic reasoning or rationale for volatility. Some of these could play at different periods of time. There could be election, there could be political reasons, there could be RBI action. What is it that RBI is expected to do? So currently we are looking at RBI. RBI has already increased the repo rates, and there are chances of the RBI further increasing the repo rates. So the interest rate is expected to go up, and that can keep the markets volatile. If interest rates go up, inflation is already there. So that's another concern. And therefore, there could be possible impact on earnings of companies because commodity prices have gone up. Right? So in सब के कारण भी earnings पे impact आ सकता है, जिसके कारण बाजार volatile रह सकता है. There could be global macro developments as we discussed, US recessions, global inflation, etc., geopolitical reasons, variety of reasons. Then, of course, there could be pandemic. We don't know. Every time we feel we have come out of it, there's some new variant. There are even talks of monkeypox, etc. As and when they pan out, we will come to know what is the impact. But these are things which can keep the markets volatile. FII inflows, outflows. Again, we have seen that foreign institutional investors are taking away money outside of India, and especially with US increasing the rates, They have been more aggressive because they find now that is more attractive. So all these will keep the markets extremely volatile. And therefore, the question is, how do I, as an investor, take care of all this? The very interesting slide, please pay attention to this slide. This is the 1 year performance of different categories of mutual funds. And I've taken only equity and hybrid. The reason why I'm showing this slide is when you look at most equity schemes, and this is industry average, for the last 1 year, the data is as on 15th of June 2022. So 1 year prior to that, तो एक साल में equity schemes के industry में क्या हुआ है? So that's the average performance. So you look at across the board, whether it is large, mid, focused, ELSS, small cap, etc., the corrections have been significant to the tune of 8, 10, 11, 12, 15%. So double digit mostly. Of course, the index is also corrected by almost 7, 8%. And I said that 2021 October se leke, when the market was at peak, it has corrected by about 16, 17%. But you look at the top 4 categories, which are hybrid schemes. Of course, we'll come to which are the different types of hybrid scheme, but just to sort of give you some context, there's a conservative hybrid fund, which has fallen only by 0.8%. So where the rest of the pack has fallen by 8, 10, 12, 15%, this is not even fallen by 1%. Equity savings is another category of hybrid fund, which has fallen by about 2.6%. Let's take 3%. Multi-asset allocation again is fallen by 3%. Dynamic asset allocations have fallen by 6%. So what you clearly see is most of the hybrid schemes, when the markets have corrected, they have fallen by less percentage as compared to pure equity schemes. And if you go back to that slide which I showed, that if I fall less, I will have to grow by only a smaller extent to come back to my profit, no loss position, to my original position. But if you fall more, you will need much more time to come back to the original position. So clearly, hybrid as a category, you find that the corrections are low, the drawdowns are less. वो कम गिरते हैं बाजार के कंपैरिजन में, और जब बाजार के कंपैरिजन में हम कम गिरेंगे as investors, I don't think -1% will worry us too much versus a -15%. So emotions थोड़ा control हो सकता है. So we will not end up taking emotional decisions. And when we don't take emotional decisions, we are not worried too much with a -1%, -2%. It's okay. You are at peace. And we said we want peace in investing. Right? So hybrid funds gives us an opportunity to be less emotional and therefore give us a better peace of mind. I'm not trying to say at any point in time that hybrid funds will not correct, will not fall. The fall will be lower, and that's important, right? Okay, let's go ahead and see. Now let's come to the other important point, why hybrid is important. Because different assets will perform at different periods of time. So for the last 20 years, you can see that sometimes equities, which is stocks, have done well. Kabhi bazaar ne acha kiya hai. Sometimes fixed income has done well. Bonds have done well. Sometimes gold has done well. So from an investing perspective, I generally correlate this with cricket. In a cricket team, there are 11 players. Some of them are batsmen, some of them are bowlers, some of them are all-rounders, and there could be one wicket-keeper. Do I know that in the next match, the batsman is going to win the match for the team? I don't know. But when I create a team of 11 players with batsmen, bowlers, wicket-keepers, and all-rounders, I go with the intent and the hope that somebody will perform. अगर बैट्समैन ने नहीं किया तो शायद बॉलर जिता सकता है, बॉलर ने नहीं किया तो शायद ऑलराउंडर जिता देगा. Somebody will perform and hopefully I will win the match. And that's precisely what happens here. Because I can't predict whether the equity will be number one next year. Because you see, across 20 years, I cannot consistently say that next year equity is going to be number one. Keeps on changing. And because I can't predict, the easier option is, मैं team ही बना देता हूं. Let me go with a team of stocks, bonds, gold, or at least two of them, stocks and bonds, in the hope that if one of the assets does not do well, the other will do well. And this is what happens. So you look at years like 2008, when there was a global financial crisis, equity markets fell by 50%. But that year, bonds gave 27%, gold also gave 27%. So the fall in equities is compensated to a reasonably good extent by debt and gold. तो आपका पूरा जो पोर्टफोलियो है एक साथ 50% से नहीं गिरेगा. And as we already explained, -50 versus -10, -10 is acceptable. Emotions कम हो जाते हैं, right? And that is why hybrid is an important category, because in hybrid कम से कम दो asset class तो होंगे. And equity or debt तो होगा, and equity and debt generally tend to go in opposite directions. So one does not perform, other will compensate, right? And when you add gold also, so gold again does well, especially when there is an uncertain environment. जैसे 2020 में जब कोविड हुआ, lot of uncertainty, किसी को पता नहीं क्या होने वाला है, वैक्सीन आई नहीं थी, gold prices started going up. So mixing these helps from an investor perspective, and all this is readily available in a hybrid category. तो मुझे individually equity fund, debt fund, gold अलग से लेने की जरूरत नहीं, आप ले सकते हो, nothing wrong in that. But for majority of us, we are used to convenience. If there's something that is readily available as a packaged product, we will go and buy it. And that's why hybrid becomes very, very important. As I said, hybrid, why important? Again, because it can cater to all types of investors. So if somebody is conservative, there's a conservative hybrid fund. Somebody is aggressive, there's an aggressive hybrid fund. Somebody is moderate, you have something in between. So that's the beauty of hybrid, that I can address all types of investor classes. We'll understand some of these individual ones, and then we will end today's session. I'll take 3 or 4 of them. So first is the conservative hybrid. I will also try and explain where does it fit in from an investor perspective. So when you look at a conservative hybrid, the word conservative means इसमें debt ज़्यादा होगा. So the debt component is higher. And therefore, when you look at this hybrid fund, you will find 75 to 90% is in debt and only 10 to 25% is in equities. And debt can be more stable as compared to equities. But I also get some amount of equity so that I get slightly better returns. So who is this fund good for? For people who are conservative, who are risk averse, who don't want to take too much of risk. So typically a fixed deposit investor can look at a conservative hybrid scheme. Because equity पूरा नहीं चाहिए उनको, थोड़ा सा हल्का सा equity. Right? So it is like you are preparing a dish. So dish में हम थोड़ा सा नमक डालते हैं, थोड़ा सा मसाला डालते हैं स्वाद बढ़ाने के लिए. So similarly, that equity is that masala, the swad, to get your taste up. So you get slightly better returns than a pure conventional debt return. Then there's the other extreme, which is the aggressive hybrid fund. So aggressive means there is more equity. So 65 to 80% of the money will be invested in the stock markets, and about 20-35% will go into debt. Now, ये किनके लिए suitable है? Again, this is a very interesting category of hybrid fund for people who want equity-like performance. लेकिन pure equity नहीं चाहिए. Equity का मजा चाहिए, ठीक है? पर risk थोड़ा कम कर दो. So aggressive hybrid becomes a right category to look at, because you got equity plus debt, and equity and debt generally go in slightly opposite directions. But when you come to these kind of funds, please remember your time horizon is very important, because large amount of money is going into equities. You should stay for minimum 3 to 5 years. That's a good fund to look at. The next category is a dynamic asset allocation. As I already said, dynamic means the ratio between equity and debt will keep on changing. It is not fixed. Now, who changes? There are all asset management companies have this dynamic asset allocation funds, more popularly called as BAF or balanced advantage funds. And most companies have their own proprietary model where they keep changing between equity and debt based on various parameters. Now, this is a fund which ideally is supposed to take decisions based on what is happening in the macroeconomic environment, plus the other parameters. And therefore, this fund is for people who do not want too much of volatility. So ideally, these funds should be less volatile. When I say volatile, fluctuation कम होना चाहिए, उतार चढ़ाव कम होना चाहिए, emotions आपके better हो जाएंगे. You control your emotions better. This is also a good fund for people who are waiting to invest. अभी इंतजार कर रहे हैं कि क्या करूं, बाजार में पता नहीं, बाजार तो टूट रहा है, अभी करूं कि नहीं करूं. So instead of wait and watch, आप इस फंड में आ जाइए, because आपको चिंता करने की जरूरत नहीं है. The fund managers will keep changing. आपका सारा पैसा इक्विटी में कभी नहीं जाएगा, right? So you're not taking a big chance or risk of equity with this fund. The next category is multi-asset allocation fund. Multi-asset means multiple asset classes, and as per SEBI, there should be at least 3 asset class in this portfolio. और सब में कम से कम 10% का investment होना चाहिए. Again, it's a very interesting fund. So most fund AMCs will have a multi-asset which will have equity, debt, gold. And I've already shown you the chart where stocks, bonds, and gold have performed at different periods of time. तो कभी गोल्ड अच्छा करेगा, कभी डेट अच्छा करेगा, कभी इक्विटी अच्छा करेगा. But I can't predict. So you get into these funds hoping that somebody will perform. कोई ना कोई तो खेल लेगा. But again, when you come to invest in these funds, typically these funds will have large exposure to equities, about 65 to 80%, which means your time horizon is again critical. You should come to these funds with a 3 to 5 year time period. And this is also a good fund to create wealth in the long term. So अगर आपके financial goals है, बच्चों की पढ़ाई है, your own retirement, which you have to take care of, which is 10, 15, 20 years down the line, multi-asset fund is an excellent fund to look at because you're taking care of the vagaries of the market, the volatility of the market in an automatic, readily packaged product without you individually taking exposure, equity, debt, and gold. So gold and debt will be 10 to 30%, equity will be 65 to 80%, right? So this is broadly the types of hybrid funds. There are of course a couple of others which I have not discussed, but more relevant are these funds, which is what I've tried to explain. So I think with that, I will stop here. We have explained what are the reasons for volatility in the current market. And we said that globally also we want peace. When it comes to investments also, there is conflict inside our mind because of the system 1 and system 2. One is emotional, the other is logical. Most of us, most of the time, will be emotional in nature. And emotional decisions can impact our wealth creation journey and process. And therefore, hybrid becomes very critical because when the market is volatile, hybrid funds, because they have combination of asset classes, equity and debt, which tend to move in opposite direction, the volatility or the risk comes down. And we also learned one very interesting thing, that the lesser you fall, the better it is. And hybrid fund fits perfectly well as compared to a pure equity fund, which can have very large corrections. Hybrid funds will not fall to that extent. And therefore, the return journey or the bounce back can be much faster. More importantly, we will be able to manage our emotions well. And when we manage our emotions well, our longevity in investment will increase. We will not be too much concerned or worried about what is happening in the market, right? So with that, I would want to stop here. Thank you all of you for your time. I think we have some time left, Shoaib, if we can take some questions.
Thank you so much, Hari. It was a very insightful session. In fact, one of our viewers have also said that this weekend has been very successful for him, and it was nice.
Thank you so much.
So We have more than 500 questions. So what I'm going to do is probably I'll just pick out some of the most common questions that I see most people are having. For example, are these hybrid funds suitable for investors retiring in the next 2-3 years? Hari?
Yeah, sure. So very much, yes. So from a retirement perspective, I think there are two elements to retirement. The first is the retirement itself. When I say retirement itself, the creation of the corpus for retirement. And if you got 2-3 years left for retiring, is what I understand from the question. I think you can definitely look at hybrid funds. For example, a BAF kind of product. You can look at investing in a BAF kind of product, which is a balanced advantage fund, which is essentially a dynamic asset allocation fund where the fluctuations is taken care of because the fund managers will keep changing the portfolio. So from a corpus perspective, because only 3 years left, I would suggest that you can get into a BAF kind of product. And then the most important critical post-retirement element is that you also have to remove those withdrawals or take those cash flows, because after retiring, obviously one would want to assume that you would want to take care of your expenses and therefore you need some money coming back to you. So one is you create the corpus because it's 2 to 3 years, look at a BAF kind of product. After you retire, you also need withdrawals. So there's something called SWP. I'm sure all of you know about it, which is systematic withdrawal plan, where you withdraw a fixed amount every month or quarter or year, depending on how you want that cash flow to come to you to take care of your expenses. So even from the withdrawal perspective, you can look at a hybrid fund. So hybrid fund can work both ways, pre-retirement and post-retirement. So post-retirement also you can continue to stay invested in BAF kind of products, or if you want to be more conservative, you can come to a conservative hybrid category, which I already talked about, which will have 75-90% in debt and only 10 to 25% in equities. Why that 10 to 25% is important here is again because our expenses will keep going up because of mehengai, because of inflation. And therefore that equity element gives you some chance to match the inflation returns, right? So I think this sort of addresses the question, Shoaib.
So one question I have is between hybrid aggressive equity and equity large cap, which one is a better choice?
It's a slightly difficult one to answer. So obviously aggressive hybrid has both equity and debt. As I explained, 65-80% will be into equities, 20-35% will be debt. Large cap is also a good fund to look at, but my understanding is, and my general comment here is that asset allocation is very important. And when I say asset allocation, investing in different asset classes. So equity may be paisa hona chahiye, debt may be paisa hona chahiye, gold may be paisa hona chahiye. So from that perspective, if you already invest in some debt instruments or a debt mutual fund, then you can look at a equity fund like a blue chip or a large cap fund. But if you don't have a separate debt investment, I would strongly urge that you should look at hybrid funds which have both equity and debt. And if you have a long-term horizon, so aggressive hybrid, as I said even during my presentation, because it has a large amount of equity exposure, your time horizon is very critical. You should stay invested for 3 to 5 years. So aggressive hybrid can fit in there.
Okay, thanks, Hari. Okay, I'm just clubbing 2-3 questions. They all seem fairly similar. So how a balanced advantage fund different from hybrid funds? And second part would be between balanced advantage fund and equity saver fund, which one is a better on a risk versus return basis? And what type of investors would be fit for all of these funds?
Okay, so I think I've explained that. Let me go back to this slide again. So this is the dynamic asset allocation fund, which is the BAF. So BAF, as I said, the portfolio will be changed basis a variety of parameters that the fund managers will look at, and typically these are done by some software or model. So basis the changing environment, fund managers will reallocate between equity and debt. तो कभी equity ज़्यादा होगा तो कभी debt ज़्यादा होगा, तो बाजार के हिसाब से वो constantly change होता रहेगा. The second part of the question was, Shoaib, I think with conservative, am I correct?
It's the difference between balanced advantage fund and equity saver fund.
Okay, equity saver. So equity saver I have not talked about here. So equity saver fund is a fund which has equities, it has arbitrage, and it has debt. So equity and arbitrage put together, the fund is mandated to invest 65%. So from that perspective, the equity saving fund is 65% equities, even though the pure net equity exposure may not be 65%, but equity plus arbitrage put together will be 65%. And arbitrage brings some element of protection to the portfolio. So if you are comfortable with a 65% exposure to equities at all times, which includes arbitrage, then you can go for the equity saving fund. On the other hand, if you feel that I leave it to the fund manager to shift between equities and debt, because please remember in a equity saving fund, you will have debt also. The minimum exposure required is 10%. So as well as when you come to a BAF kind of product, it is completely dependent on the market, and therefore the fund manager can keep rotating between equity and debt here. So important is what kind of investors should look at it. Obviously, you're not worried about asset allocation. You leave the choice to the fund manager. You go for the BAF kind of product, minimum 3 to 5 years. On the other hand, when you look at the equity saving kind of category, which is equity, arbitrage, and debt, and it's basically you are willing to take that exposure to equities, even though the net exposure is limited. But please remember, overall 65% will still be in equities. Okay, so if you're comfortable with that kind of product, you can definitely look at equity savings also. Most BAF products also offer equity taxation. So from a taxation perspective, equity saving fund and BAF will typically be similar, even though both of them have exposure to equity and debt.
Okay, Hari, I'm going to ask you something very specific because one gentleman has asked a fairly long question. Is it okay if I put my capital in hybrid funds and start SWP for my monthly expenses, as I am a retired person? Or is it better that I do a SWP in my equity, which consists of large, mid, small, sectoral index international funds, because they are giving me better returns compared to balanced advantage fund? So I think he has invested for a fairly long time because he's referring to better returns with his equity portfolio.
Okay, so if you are a retired individual and you're dependent on that regular cash flow in the form of monthly income or quarterly income, my strong suggestion is that after retirement, especially if you're dependent on that money to generate income for you, we should stay away from pure equity funds. You have two choices here. One is you go to a hybrid category fund, which we already discussed. You can look at a conservative hybrid fund. You can look at a BAF kind of product to put that lump sum amount and start doing withdrawals on a regular basis. Or you can go to a pure debt kind of fund. Now again, debt, there are various categories that are available. But the challenge with debt is that, especially if you're in the high tax income bracket, the withdrawals that you start doing immediately, because in debt, the taxation is for 3 years, which means if you start withdrawing before 3, it is considered a short-term capital gain and you pay tax as per your income tax slab. So if you're in the 30% bracket, you pay 30% tax on the earnings. Compare that with a hybrid fund like a BAF, which I said most AMCs will offer as equity taxation. Even when you do systematic withdrawals here, immediately after you put the lump sum, you have equity taxation, and the equity taxation in short term is only 15%, and that is also only for 1 year. So from the second year onwards, what you withdraw is categorized as long term. So you don't wait for 3 years, unlike a debt fund, whereas here after 1 year, it becomes categorized as a long-term capital gain, and the long-term capital gain is subject to only 10% taxation. So my sincere request and advice, pure equity funds for SWP is risky. Obviously, the returns might attract, but please remember, if I'm dependent as an individual on that earning, I would rather want to come to hybrid, which also gives me some element of equity to take care of the inflation bit of it.
Okay, one of the most this I'm just paraphrasing it because a lot of people have asked this question. How long do we anticipate the bear market to continue, and do you suggest that we should switch to other schemes under the given circumstances, as all are having negative value now? So I think must be a recent investor, someone who started out quite recently.
I think this is a question that we are facing these days when we do investor sessions. Please remember, nobody can predict what is going to happen in the market. All of us know for the fact that in the long term, equities will perform. There is no doubt about it. And it is in the short term that markets can be extremely volatile. And I also showed that chart, the probability of markets being volatile in the short term is very high. And given the volatility, I think it is part and parcel of the equity markets. Honestly, we don't know how long this will sustain, but internally, we feel that as long as there is pressure on crude in terms of the crude being about more than $100 per barrel, I think these are challenging times. Inflation is also high. So we said during the presentation that the supply chain disruptions have also happened, and we anticipate it to continue for some more time. The positive side of it is that India as an economy is perhaps on a reasonably good footing, so that not too much concerns. On the domestic part of it, most of the volatility today is stemming from international events, and as and when they subside, frankly, we don't know when they will subside, but as and when they subside, I think we should get into more stable markets. The good thing that is also happening is thanks to investors like all of you, even though FIIs are selling extensively, the domestic purchases have been fairly good, and they have sort of helped us to, by and large, protect the market. You can imagine 10 years back, if this was the kind of selling that FIIs would have done, what would have happened to the stock markets. But today, because of all of us who are investing in mutual funds by way of SIPs, there's a constant flow of money that is getting into the markets, which is to a large extent negating the impact of FII outflows. But again, there could be questions on FII outflows. When can they come back? Honestly, we don't have an answer. But at least for the short term, we believe that this will continue because US Fed is also on an aggressive rate hike that is happening. So clearly there's FII outflow, and that's expected to happen for some more time. But Indian domestic economy is doing fairly well. Some challenges do exist in terms of the corporate earnings because of higher commodity prices and inflation. But as of now, we don't expect too many issues on the domestic side. But yes, over the period of time, from a medium-term perspective, we are quite bullish on the economy, on the stock markets, as well as the corporate profitability. So from that perspective, the equity markets will continue to do well from a medium-term to long-term perspective. Coming to the question of what should we do now? Should we redeem? Obviously, if you don't need the money now, and therefore we strongly advise and suggest that you should always invest with some financial goal in the back end. So if I invest for a particular goal like retirement, which could be 10 years, 15 years down the line, I don't think the short-term events or the short-term volatility should impact us. Today, another interesting thing, Shoaib, that has happened is that we have found that the Indian investors have sort of matured reasonably well as compared to what it was 5 years back. The kind of panic that we used to see earlier is not happening that much. I have seen a lot of investors being quite positive in terms of taking this as an opportunity to do additional investments, which perhaps was not the case 5-10 years back. So I think there is some amount of matured behavior that's happening in an investor. I think that's the way to look at it. If you don't need the money in the next 2, 3 years, 5 years, I don't think you should be really worried about what's happening. If you have got enough money with you on the table, use these as an opportunity, but stagger those investments over the period of time.
Okay, Hari. Um, one Mr. Amod has actually asked, can a long-term investment of approximately 10 years overcome market fluctuation and risk, as well as give good returns irrespective of the volatility?
Yes. So if I'm sure that all of us know that equity is for the long term, and there are data strong enough to suggest that when you stay invested for longer periods of time, the probability of negative returns or losses keeps on reducing, especially when you look at from a 10-year perspective. I think there are enough data to suggest that the instances of negative performance in a 10-year period is practically zero. So yes, from that perspective, the longer you stay, the more you negate the volatility. Obviously, we know that equity in the long run will be one of the best performing asset classes. So return-wise, you will get one of the best performances. Risk gets mitigated because of the long-term horizon that we're looking at.
Okay, Hari. We'll take two more questions now.
Yeah.
What is your view on gold, and how much should we invest in gold? So,
gold, honestly, as an Axis, we don't have a view on gold. But yes, definitely from an asset allocation perspective, I strongly urge that people should look at investing in gold also. And this typically happens in the Indian context. Most people do buy gold in some format or the other in India. But I would rather say that asset allocation wise, 10%, 15% exposure to gold is mandated in our portfolios. And one way of achieving it is by getting into multi-asset kind of hybrid funds. Because practically what happens, Shoaib, is that I know that I should invest in equities, I should invest in debt, I should invest in gold. Gold, I may still be buying physical or whatever. But there are challenges around physical, which we'll not discuss too much in depth. But then there are challenges around physical in terms of purity, in terms of storage, etc., etc. And therefore, the easier way out is to get into a package product, which is a multi-asset hybrid fund where I get exposure to equity, debt, and gold. So gold, yes, no views, but 10% exposure to gold.
okay, this is our last question. Is it better to invest in liquid or arbitrage fund?
Okay, so a lot of out-of-syllabus questions. I did not touch upon arbitrage funds. So arbitrage is another category of hybrid funds. And as the name suggests, arbitrage essentially means opportunities. And here the fund manager would want to take advantage of the mispricing that exists between the cash market versus the futures market. So arbitrage funds are expected to do well when the markets are volatile. And given context which we face today, I think they should perform better as long as the futures market is trading at a premium. If it trades at a discount, then you may not end up making money in arbitrage. But typically, from a 3 to 6 months perspective, on an average, we know that arbitrage can give you decent performance. A liquid fund, on the other hand, was not doing that great, but because of the rate hikes that have now happened, 90 bips by RBI and some amount of liquidity measures, we have seen that the short-term interest rates have gone up. So liquid funds have also started to give reasonably good returns. I would rather put it from the objective perspective. Why do you want to invest in arbitrage versus liquid? If it's from a parking perspective, both are good options. But one distinct advantage that arbitrage offers is that it has equity taxation. Again, as I discussed, equity taxation means the short term will be 15%, as compared to that if you put in a liquid fund, the taxation will be as per your income tax slab, and you could be paying 30% if you're in the highest tax bracket.
Okay, I guess that's where we should end today. Even though we have lots of questions, we'll probably get back to our team will get back to some of the questions. Thank you so much for
So I
attending
think
our.
one general question that I want to address, Shoaib, I was also
Yeah,
looking at some of the questions. I
yeah.
think a lot of questions pertaining to SIPs, lump sum. I think my suggestion always is that, especially when markets are volatile or when the markets are at reasonably high levels, it is always advisable to do SIPs, or you can do STPs, which is systematic transfer plans. If you want to do lump sum, please stagger your investments. Don't put your entire lump sum at one shot. उसको थोड़ा थोड़ा करके आप बाजार में उतारते जाइए. Over the next 6 months, 12 months is where you should slowly and steadily stagger your investments. I think that's the way to look at it, because typically that helps you to manage volatility. And yes, you can do SIPs in hybrid funds. You can do SWPs in hybrid funds. So SIPs for wealth creation. So we talked about aggressive hybrid fund. We have multi-asset allocation fund. If you have got wealth creation as your objective, 5, 10 years, 15 years down the line, you can start SIPs in these funds. If you're on the verge of retiring or you're retired, you need regular cash flows. You have SWP as an option using hybrid fund. So I think, as to sum it up, hybrid fund gives you the best of both the worlds. For wealth creation, also there are funds that are available. For your regular cash flow requirement, also there are hybrid funds that are available.
Okay. Any other question that you think you would want to take up directly?
Let me just go scroll to some of these questions. So as regards inflation, there are some questions. Again, inflation, RBI is expecting that for this financial year, the inflation is expected to be slightly higher, but it should get moderated by the Q3 and Q4 of this financial year. Monsoon is going to be one important event. As per IMD reports, the monsoon is supposed to be above average. But given what we have seen so far, we have not seen that much of rain that has happened. But hopefully, if monsoon happens well, from the agri side of it, the price hike should not happen too much. It should be moderated. If not, there could be additional inflation that can happen because of higher agricultural prices as well. So RBI expects this to sort of subside, normalize by Q4 of the financial year. Okay, I think that is from an inflation perspective. Okay, there are a lot of questions regarding to the performance, Shoaib, of the Axis Fund. So I'll just give a very general statement here. Yes, from a short-term perspective, you would find that some of these schemes have not done well. My sincere request to all of you is that when you look at Axis as a fund house, I think we are very clear as far as the investment philosophy is concerned. We are the fund house which will always look at buying quality businesses. Okay, and what has happened, unfortunately, in the last year or so is that because there was too much of liquidity in the market, many of these stocks have run up, and some of these stocks that have run up may not fundamentally be very strong. And unfortunately, we were not part of these stocks, and you can therefore expect what has happened. The other thing that has also happened is that I also talked about FIIs taking a lot of money from the markets, and FIIs also typically tend to buy good quality businesses. So when they exit those good quality businesses, the price sort of corrects, and the corrections are found to be reasonably higher in those quality stocks. And at an Axis, when you look at it, we run a reasonably concentrated portfolio, which means that whatever has been the impact because of FII flow, the impact gets sort of amplified. But rest assured, our portfolios are one of the best portfolios in the industry. And from a medium-term to long-term perspective, we are pretty confident that these stocks will bounce back. The quality businesses will continue to do well. Okay. And therefore, the medium-term, long-term perspective, I think there's nothing really to be worried about. Please also understand that markets run in cycles. Even some of these businesses, in terms of stock performance, run in cycles. But from a medium, long-term perspective, these businesses are absolutely good. Most of the companies that we have invested in across our portfolios, are either market leaders, industry leaders, and you expect industry leaders to bounce back. And that will happen. So please remember, some of these are short-term, transient in nature. Quality-wise, portfolio-wise, we are pretty confident. We have full conviction that these portfolios will do well in the medium to long term. I think by and large, Shoaib, these are the questions that have come. In case we have missed out, we will try and revert back to you because it's difficult to sort. I think I'm seeing almost 800, 900 questions. It's difficult to sort and run through those 900 questions, but I think most of them Shoaib has already taken in terms of collating, clubbing, whatever I could see and figure out. I've also tried to do that. Thank you so much, all of you, for your time, taking your time out on a Saturday morning. I hope this session was useful, and we have looked at how hybrid funds can help you sort of negate the volatility. Please remember, the volatility in the market is beyond our control. But what is important is, can we manage the volatility inside our mind? And to do that, I think hybrid funds gives us a good opportunity to manage our emotions. And that's very, very critical and important in investing. Over to you, Shoaib.
Thank you, Hari. Thank you, everyone, for joining us. You have a great weekend and stay safe.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.